140 homes on the market. So we've seen a reduction of about 25% of the new construction inventory in 1 year. Do you think it's going to accelerate with these numbers? If that does accelerate, we're going to have a shortage of new construction. We might have a glut still at that 300 or higher price point, but of the affordable side, we're going to see a shortage. And let me show you what's going on there. You guys know my famous graph that goes from 1999 to 2009. Every month around the 7th of the year, or the 7th of the month, I say, well, how many houses can I show today? And I look at half acre or less, areas 10, 20, 30, 40, and I'm looking at residential. That's all. I'm not looking at acreage, I'm not looking at blah, blah, blah. I'm just looking at one thing, and I've been doing it since 1999, all right? So we can see what's going on with the market. And we all remember the climate in 1999. I could have gone out and shown in March 3,000 units between 0 and however many million dollars. In 2000, I've been pretty much showing 2,300 units each, for that full year. But now's when it starts getting interesting. Remember 2001, let's see, we had September 11th. Oh, I got a chart, by the way, that shows you every major catastrophe Spokane has experienced for the past 8 years and how it's affected our market. But you can see what's going on there. The inventory is kind of stabilizing. 2002, it almost flat lines. 2003, that's when we started seeing the changes. Remember the earlier slides? Saw 8% appreciation. This is all 1% appreciation stuff. Remember that? This is all 1% appreciation inventory. Because people, if there's too many houses on the market, aren't going to pay a lot for a house. Now, if there's no options, if there's less inventory, they're going to pay a little bit more. Does that make sense? You all know how it works. The guy says, well, the house down there just sold and mine's better than his. That's the way it works. And that's when we started seeing it happen. We had 1,700 units on average on the market in 2003, because that's when we started seeing the appreciation. And we saw more and more appreciation, because now we're down in the 1,300s, 1,200s. Remember, we take a listing, and man, you couldn't wait to get the listing because it was money. It was going to sell. This is ultra hot. This is 15% appreciation. This is 15% appreciation. This is about 8% appreciation. Then something happened in 2006. I think what we saw happening was California, the East Coast, everybody started to melt down. We didn't know it yet. We're still in the sweet spot up halfway through 06. 07, here we go. We jumped up to 2,000 units. Shoot, we hadn't seen 2,000 units since what, 2002. But that's when things kind of started coming to a screeching halt for us, because we didn't have the immigration that we were experiencing. Let's look over at 2008. We all know what 2008 was. Wow. Just almost parallel to 2006, but just more units, right? But now look what's happening. This is the cool part, you guys. I think our market's beginning to stabilize. Here's our inventory right now. And it's a flat line, which is really solid. Last time I saw a flat line like this was in, what, 2003? 2002. I mean, it's not bad, and we're at an inventory level that's less than it was. But what are all these years here? Green, yellow. So all this stuff right up here, right? And y'all remember what the market was like back here. I mean, it wasn't bad. It was 1% appreciation market. All this stuff was 8+ appreciation market. And we're getting right in that sweet spot where it's nice and balanced. And so now we've talked about inventory. We've talked about projected inventory, right? New houses that will be coming online maybe in the next 3 or 4 months, or should I say won't be? Because if we're running, now these are all scrubbed numbers, by the way. I took out all the houses that are subject to home inspections. So if you ask for all the houses to show, and you look at active houses, homes that are subject to home inspection will come up as available properties. I've taken them out because as far as I'm concerned, they're under contract. And that reporting method in the MLS began in April of 2006, and ever since then we've scrubbed these. So these are clean numbers on houses that have no contract on them. Okay? So we're at around 2,017 houses yesterday. Not bad for area 10, 20, 30, 40 compared to how it has been and the nightmare that it was back in the, when we were getting multiple offers and fighting over stuff and blah, blah, blah. So we're actually looking good. But when you start looking at, okay, 2,000 units, and we know that 420 of them are brand new, so 25% of that 2,000 is brand new. What happens when the brand new ones aren't there anymore? There's no replacement properties coming online. See? And we're looking at the vacancy rates. We're not seeing people leaving town. People are here. We're probably seeing people doubling up. We're seeing different living arrangements. But the bottom line is, we're really positioning ourselves. Now let's talk a little bit about what influences people to move to Spokane. We all know why we move here. It's a fun place. It's great. It snows a lot. We have the best summer. We have the best summers in the world. We have a ton of water. We have a lot of opportunities. We can all be up skiing in 35 minutes. We can be at the lake in 20 minutes. We can be on a river in 10 minutes. Okay, now let's say I live in California. And let's say there's a drought going on. It's the third year of the drought. And let's say the governor says, we're going to call they're looking for a national or a disaster thing. Let's say they start rationing water down there. Remember when the brownouts were happening in 04 and 03? Yeah, I do. Because this is what happened. See, a few extra home sales tweaks our market, you guys. We're not that big of a huge market. It doesn't take a lot to tweak our market. We're big enough to be conservative and just, but we're small enough to be affected by a little extra immigration. This down here is about 1.7% population growth. This up here is 1% population growth to help illustrate that even more. Huh? Okay, we're about 1.5 or around there last I heard from Avista, maybe 1.3. But if things loosen up somewhere else, which what we hear they are, someone was saying in California, the average person that's selling right now pockets $100,000. Yeah, 3 years ago it was $200,000. There's still the average person that sells is still making money. And once that market loosens up, we're back to normal. All right? Got some more stuff for you. If I have not proven this to you yet. Well, this is just my slide. Remember my slide that says when people ask, hey, when's the best time to sell? And I always, let's look. Because in July, the median sales price of July in 08, or the average sales price was $220. So for that month, the month of July, the closed volume, X amount of houses divided by total dollar volume, was $220,000. The median price, half above and half below, for that particular month in July of 08 was $198 or so. That usually reflects sales from the month or two prior. So if your house closes in July, when did you sell it, you guys? May or June. So does it stand to reason if I look along these little bumps here and I say, okay, what's July? Let's see, here's another July. Here's another July. Another July. Okay, so are we seeing a trend here regarding July closing months? So what's your hot month in the Spokane market?
May.
People are willing to pay a little bit more for a house because either there's less inventory or there's less selection. But there's probably more competition to buy those houses. So that's exactly right. So where are we right now? March. When's May?
About 6 weeks away.
Yeah, and that's also coincidentally when it warms up. That's also coincidentally when we're going to have a shortage of new construction. That's also coincidentally midway through the $8,000 tax credit that they have to have closed by November 1st. So November 1st, December 1st. December 1st is the end of that tax credit. Do you hear me? All we need is a little extra kick, and we're out of a balance. And you already know when the hot market is now, right? Get your mailers out. I'm serious, you guys.